Hello and welcome. You're watching Your Trades on ET Now. I am Snehisha. Along with me is Ankita Saxena. And Ankita, very range-bound day of trade coming in. Let's take a look at how the markets have performed in today's trading session. We've ended on a choppy note, but nonetheless, if you take a look at the bright side, we've seen quite the recovery coming in from the day's lowest point. Remember, 22,812 is where we were struggling to hold on. In fact, that was the lowest point of the trading day. At one point, we were struggling to hold on to those 22,800 levels, pardon me. But right now, we're comfortably above that 22,913. So it's been an exact 100-point uptick coming in from the day's lowest point. So at least that is looking good for the Nifty. Let's take a look at what the Sensex has done, because it's largely been in tandem with the Nifty today. Almost a 0.2 or 0.3% cut coming in on the Sensex in today's trading session. There you have it. A 200-point cut coming in on that index. Not bad compared to what we have been seeing over the last couple of trading sessions. It's been the broader markets that have done the heavy lifting for the market today. A 1.2% uptick on the mid-cap index and 1.3% higher, or rather very close to 1.5% higher uptick coming in on the Nifty small-cap index. That's looking good. India Wix is the one to talk about today. Almost a 5% cut coming in. We're looking good around that 14.7% mark on the India Wix. And Nifty Bank, however, continues to be under pressure. A 0.5% cut coming in on that index. Shriram Finance, NTPC, M&M, Adani Ports, BEL and Trent winners on the Nifty 50 pack. From that pack, on the flip side, HDFC Bank deep cuts of 2.5% in today's trade. Maruti Suzuki was lower by 2%. Tech Mahindra, Tata Consumer, HCL Tech, all of them have been trading with cuts of anywhere between 1.5% and 3% in today's trading session. Sectorally, metals continue to shine bright, followed by energy, PSU banks, auto, realty. All of these have done well today. What's not done very well is the Nifty Pharma and IT index, rather flat, but not much to worry about on that front. But nonetheless, these two have ended the day in the red. A lot of other stocks were newsmakers in today's trade. You have Tata Power on the back of a bullish HSBC note coming in. Not only that, IGL as well as NHPC on the back of some very bullish brokerage notes coming in did well. Bajaj Finance on the other side was somber in today's trade on the back of a slightly bearish note coming in. But that's what I was spotting today. Ankita, what looked good to you?
Absolutely, Snehi. It was a rather somber day coming in as far as the benchmark indices were concerned, but the action was really held up by broader markets. A bit of a sigh of relief coming in since yesterday as far as the broader markets are concerned. So that really stood out for me. And besides that, we also had the ITC, Godfrey Phillips, VTS Tellers, the cigarette manufacturers in focus today, because there is news that there might be a GST hike as far as tobacco products are concerned from 28 earlier to 40% is what we are penciling in. And so these stocks were in focus today. They were trading with cuts. Also, we had the SIAM data that came out, and that gave a very weak outlook for passenger vehicles in the coming quarters. And major players like Maruti, Hyundai, M&M, they're all expecting only 1% year-on-year industry growth. On the back of that, Nifty Auto was in focus today, and these names were also in focus. Besides that, we also had a note by JP Morgan on Petronet LNG. They're maintaining an overweight. So that was in focus. On NHPC, there was an upgrade, like you mentioned. So these were the names largely that were in focus today, and that's how the market largely panned out. But to get you more perspective on the market, we are now joined by Kunal Bothra on the technicals. Hi Kunal, thank you so much for joining us today. Kunal, another, I would say, I was telling Snehi, it's a blah day in the markets, especially on as far as the frontline indexes are concerned. I mean, it's very range bound right now. There's no action, but it's a second consecutive day of action perhaps in the broader markets. Firstly, what are the levels that you're working with as far as the benchmark indices are concerned? And for the broader markets, are we out of the woods now? Is it safe to say that?
So, good afternoon. Yeah, I think you can say that maybe the market mood was a bit more somber today when you look at the indices, but then it was a lot more vibrant when we look at this in terms of the market breadth. Now, we saw exceptional recovery for so many of the stocks which were beaten down over the last, I think, 8 to 9 days consecutively. What this means is that there were two ends of the markets today. The mid cap end of the market looked quite strong, but the larger cap end of the market, HDFC Bank, Maruti, ICICI Bank, etc., many of these larger cap names, they were down 0.5%, 1% broadly for themselves. So which means that we are now looking at a construct where there could be a possibility that the oversold market breadth would start to take a bit of a bounce, and traders who are shielding more towards the defensive names of the larger cap stocks, which have been relatively more strong, they are the ones which are starting to see some bit of profit booking. So I think it could be more of sector rotation or rotation within the basket of the overall market cap weight, where large cap stocks may start to a bit underperform a bit, and large and mid caps and small caps may come back into action. In terms of the price levels, we would still look at 22,800 as a very strong support for the index. I think almost 5 or 6 consecutive days, over the last 1 or 2 weeks, where the index has managed to take a bounce and take support at the 22,800 mark. So till the time the level holds, we can expect that the Nifty would continue to at least be stable, if not move up higher.
Okay, but at least stable, if not higher, is still better than the Nifty moving lower, right? Kunal, in a market like this, what are some stock picks that you have for our viewers heading into trade tomorrow?
Yeah, of course. I think any kind of green is good in this kind of a market. And 2 buy calls is what I would suggest at current levels, and both of them are differentiated in terms of the sectors. The first one is one DV slab. That's a chart which has started to look attractive, especially with the stock bouncing back from its 20-day moving average. 5,800 is the key support for the stock in terms of the moving average. So we look out for targets in the range of 6,200, stop loss at 5,900. IndusInd Bank is the other stock which is forming a classical bullish flag formation on the daily charts, bouncing off from its respective moving averages. So 1100 as a target for IndusInd Bank and stop loss at 1,020.
All right, Kunal. So DV's Lab and IndusInd Banks, these are the 2 picks from your end. Thank you so much for joining us today with that. But let's move on to the word coming from the wise, a big advocate of India's self-reliance in energy and renewables. Enam Holdings' Manish Chokhani believes that the need of the hour for India is increased investments in the energy security. Even as he marks the space as a long-term opportunity, he believes it is the best to monitor valuations in this current market. Let's listen into his views.
In terms of renewable, I do think that's a very, very long-term powerful theme which is still running. Valuations in some cases are not sustainable, but the theme itself is very, very powerful. That we will have to invest a lot more into our own energy security, and whether it's wind or it's solar or it's nuclear, anyone who's playing into that, including the transmission players, there's very, very long room, for years ahead for money to be made over there. I would just, watch out for valuation, because again, like people take the 10-year story and then they pay up for the 10th year, immediately. That's really what one has to be cautious against, because as an investor, the only thing in your hand is the price you pay at entry. After that, everything is in the hand of Mr. Trump and the market cycle and the politicians. So it's best to be a bit cautious when you're buying, and then be optimistic in whatever you're owning and see how high the market can take it. The J curve of energy consumption, because as you get richer, you don't just go and buy a car and you don't just go and buy a mobile phone, you end up consuming a lot of energy as well. And we haven't invested in energy really after the blow up of 2007-8, when all these power companies went downhill. So that power shortage in India and the demand for power in India is a long-term trend. India may not yet have built out the EV infrastructure. So the early adopters, will buy it. Like my own son is one of those. But it may be this country goes the route of hybrid, because then the car just starts off on your ICE engine, and then that itself powers your EV, and you don't have to be dependent on going and charging somewhere. So we don't know how this game plays out, which is why everyone is trying to sell all the basket of products in their portfolio. The Indian companies have, like Mahindra and all, have responded really well to it. I'm not so sure on the offerings of some of the others, including the leader like Maruti. I'm not so sure what products they will bring out. And there is certainly room for this market to be overturned, the way we've seen it happening, for example, very recently in the paints market. Also, the government seems to be in a mood to allow the Teslas and the BYDs to come into India, and their products are materially superior to what we are seeing, in the Indian market. So how that game plays out, what the tariffs will be, only time will tell. It's a space I would not venture in at all, because there's no predictability.
Okay, big voice on the street, Manish Chokhani, talking about his outlook going ahead, the way he would like to navigate the markets, and what is looking good and what's not looking good going ahead on the street. But on that note, let's take a look at what the F&O space has done in today's trading session, what the derivative roundup has been. And let's start by looking at the index futures trend for the February expiry, and it's looking pretty flat for the Nifty. Not surprised to see that, since we have been stuck in a range-bound trend for the last couple of trading sessions. Nifty Bank, however, on the flip side, upside, a short build-up being seen also on the back of that 0.5% cut we saw in the index today. A short build-up is something that unfortunately we're seeing on the Nifty. India VIX, like we mentioned earlier, looking very good. Almost a 5% cut coming in around that 14.7 mark is where the India VIX has settled at. If you take a look at the active calls and active puts for the 27th February expiry, let's talk about some active calls. Call writing is being seen at 23,000 and 23,100, making 23,100 your next resistance level on the upside. On the flip side, active puts are being seen, put writing seen at 22,800 and 22,900. We don't have a support level in visibility right now, but it seems like 22,800, like also Kunal was mentioning a few minutes earlier, seems to be the next support level, because we're not falling beyond that, but also we're not being able to cross that 22,900, 23,000 levels. But according to the call writing that we've seen today, at least 23,100 is the resistance on the upside. So that is also going to be kind of a hurdle for the Nifty to cross. But nonetheless, that's how the FNO space has shaped up today.
All right, moving on from the FNOverse to the stock that was in focus today. In fact, it was reeling under pressure. That was Maruti Suzuki, trading with cuts of almost 2% after the global parent Suzuki Motor flagged a declining market share amid rising competition in the country. They also said that they want to improve their share back to 50% in the next 5 years. My colleague Shrishti Sharma is joining us with the highlights of that. Over to you, Shrishti.
Well, yes, Suzuki Motor Corp has come out with their mid-term management plan, where the biggest change has come in their EV strategy in terms of the launches that were planned by FY30, wherein earlier, when the company committed for 6 BEV launches for the Indian markets by FY30, now they have slashed the number to 4 now, and that's the biggest change. Other than that, in terms of the market share, the company is still on track, and also giving commentary that they want to achieve a 50% market share in the times ahead. And along with that, the company has also shared the product mix or the key contributors in their sales target by FY30 when it comes to the Indian and domestic markets. In that, the share of BEV remains intact at 15%. But apart from that, the company is targeting to have 25% share coming in from HEV, 35% from CNG, and even 25% could be coming in from flex fuel, is what the company has said. The company aims to be number 1 in production, and they're also targeting that 4 million production capacity to be achieved per annum basis by FY30, and in that the domestic market will be a key contributor, but the company also has eyes to export these vehicles, especially in the European as well as African market. So those were the mid-term management plan coming in from Suzuki Motor Corp, where they also shared the India strategy, but the biggest key takeaway or the biggest change out of that is the reduction in the upcoming EV launches by FY30. Back to you.
Okay, Shrishti, thanks for taking us through all of those highlights on why Maruti Suzuki was down and out in today's trade. But let's keep it going with the auto pack, because despite India's lofty green ambitions, EV penetration has stagnated in the country, even as China shows the way in EV innovation. Experts now believe it will be a long road for Indian players to catch up. But which players will lead this EV race? Let's go across and listen to Horma Sorabji and Rona Konkar on the same.
We could see a jump in penetration from right now, which is about around 2.1%. I see it could even jump all the way to 4 to 5%, because you've got so many players coming into the EV space. And I think the biggest casualty of that, of course, is Tata Motors. So I think the EV space is still very exciting, because you've got a lot of mass market players coming into the market. We've seen the excitement Mahindra has created, the buzz they've created with their 2 new EVs, which they are launching they've launched this year. You've got Maruti coming in, you've got Hyundai with the Creta. So yeah, I think the EV space is going to be the one that's growing. I think Tata's, I would say, would still continue to be market leaders, though their market share will come down dramatically.
An investor in India, you have slightly better advantage for looking at incumbents, and the reason is simple. Because we don't have the entire value chain of products that go into an EV that are coming from India. So we still depend on a lot of imports, from components to subsystems to batteries and all the other chips and everything. We rely a lot on the import. So slowly and steadily, the value chain, just like we have seen in the other auto ancillary value chain for the ICE vehicles scale in India over the past several decades, the same way it will happen in the EV. It's a slow process. It need not be very fast.
All right, moving on from there to a couple of names that were in focus today in today's trading session. Couple of stocks like Tata Power. There was, IGL and other stocks that were in focus today. But let's go across to my colleague Rabinder, who's standing by with the details of why these stocks were in focus. Over to you, Rabinder.
Well, Bharat Electronic is in focus, where company has received order of rupees 962 crore, including EOFCS, which means electro-optic based fire control system order from Indian Navy. Moving to next, RITES were also in focus, where RITES and CWPRS has collaborated on marine infra consultancy to drive solution in marine coastal, inland waterways and hydropower infrastructure. Moving to next, on back of brokerage note, Tata Power were also in focus, where HSBC has come out with their note on Tata Power, and they have upgraded the stock to hold from reduced rating and hike target price to rupees 345 from 300, where they say that the company is improving despite a weak macro and doing well in solar panel manufacturing and EPC engineering, procurement and construction, but needs to speed up renewable energy project, and the weak electricity demand and slow progress in signing power supply deals have impacted the stock. They say that the HSBC believe that there is no positive trigger expected in the near future, and they have increased their EPS estimate for FY25 to 26 by 9 to 13%. And lastly, IGL were also in focus on back of brokerage note, where Jefferies has maintained the buy rating on IGL with target price of rupees 352. Jefferies says that the risk reward of the IGL looks favorable, and the potential price hike will be a key trigger for the IGL, and rupees 2 per kg price hike is enough to protect the company's margin, and company has state plans to beat gas from ONGC.
Okay, Ravinder, thanks so much for highlighting all of those stocks that were buzz in today's trade. But while we are talking about that list, let's add one more to it and talk about NHPC, because CLSA has upgraded NHPC to a high conviction outperform from an outperform rating earlier. Also hiked the target price. That stock went home with gains of 7% almost. My colleague Varun is joining us to tell us more about this note and what has led to such a sharp jump in the stock today. Varun.
Well, so CLSA has actually upgraded NHPC to high conviction outperform versus outperform, and the price target is 117 rupees. Now, CLSA believes that in the next 4 years, the stock could actually double. What they say is in past 6 months, if you see, there has been a 25% correction in the stock, and this provides a very good entry opportunity in this stock. They say that there are several projects for this company which are going to start, and this would actually boost the overall regulated equity for this company. For example, the Parbati 2 hydro project that could actually boost the regulated equity by around 27%, and also there are other projects which are going to start which would actually boost the regulated equity 2 times from FY24 to FY28, and that would actually result in increase in the overall EPS. Also, the company is entering into shorter duration regulated pump storage, which would actually add to the overall revenues for the company going ahead. They expect the earnings to grow by around 113% over FY24 to 29 against the 2% growth that the company has shown in the past 5 years. Also, they forecast 79% higher EPS, and the ROEs are expected to expand by around 512 basis points over FY25 to 27. Although they have cut the target from 120 to 117, but they say that they expect going ahead the company will have to do higher capex to generate better returns, and that's the reason there is a 3 rupees cut in the price target. But yes, CLSA believes that in next 4 years the stock could actually double, and the 25% correction that the stock has seen in the last 6 months provides a very good opportunity to enter into the stock.
All right, moving on then to the ET Now exclusive. Sources say that the government is considering minority stake sale in 5 to 6 PSU enterprises in infra, power and defense sectors. My colleague Prakash is joining in with the details of that.
Yes, we are learning from our sources that the government is planning to sell a minority stake in 5-6 PSUs during FY26. We are given to understand that small stake sales through OFS route will be preferred for this investment in a given circumstances. In fact, market conditions will be kept in mind before announcing OFS for any CPSEs. Sources are also suggesting that the focus will remain on generating fair value based on market conditions. However, sufficient gap between two OFS will be maintained to ensure better market response. OFS is likely to be launched for PSUs in sectors such as infrastructure, power, oil and gas, and defense. When it comes to strategic disinvestment during FY26, sources are informing that on one hand, government is moving ahead with the calibrated disinvestment strategy. On the other hand, focus is being provided on value generation, asset creation, and a listing of non-core assets of PSUs. So these are the two important strategies that the government is following. But the focus is being provided on IDBI banks, disinvestment, and the government is making all possible efforts to complete this transaction during financial year 2026.
Okay, Prakash, thank you so much for sharing all of those exclusive details with us. But let's move on, talk about politics, and we have to talk about the big news of the day coming in from New Delhi. Rekha Gupta has officially taken oath as Delhi's new Chief Minister in a grand ceremony at the iconic Ramlila Maidan. The event was a mega show of unity with Prime Minister Narendra Modi and NDA Chief Minister standing in support. A first-time BJP MLA, Rekha Gupta's rise marks a seismic political shift in the capital. Now she steps into history as Delhi's fourth BJP Chief Minister, following in the footsteps of Madan Lal Khurana, Sahib Singh Verma and Sushma Swaraj. This marks the return of a BJP-led government in Delhi after 27 years. A new political chapter will now unfold over there. But on that note, we'll wrap it up on this edition of Your Trades. Ankita and I will take your leave. Thank you so much for watching.